All right, everyone, welcome back for another deep dive. We love getting into the nitty-gritty of complex issues, and you guys have sent us a ton of really interesting material this week about global economics.
Yeah, real mixed bag this time.
Definitely some thought-provoking stuff. We've got sharp financial analysis like we usually do, but then also some kind of alarming, almost historical and geopolitical perspectives, mostly on YouTube, I'd say. So today's mission basically is to go through all of it, figure out what's really going on in the world economy right now, especially the big picture impact of these tariffs that are making headlines. Like, how are they reshaping trade and, international relations, that whole landscape?
Definitely some big questions to tackle. So to kick things off, let's start with this Bloomberg television interview with Howard Marks, Oak Tree Capital. It happened right after, all the market craziness and these new tariffs. The interviewer really pressed him on this. Does he still think credit's a better bet than stocks, like he said a while back?
Right. So just to recap for everyone, Marx had basically said, like a month before this interview, that credit, debt, was looking really solid, good returns, and pretty fairly priced compared to stocks. Then we had that, market dip and these huge tariffs got put in place. So everyone's wondering, okay, is he changing his tune now?
Well, what's interesting is he actually doubled down on credit being attractive. He points out that yields have gotten even better. Since he first made that call, high-yield bonds were around 7.2%. Now they're closer to 8%, because prices have gone down, of course. And then he compares that to the stock market, which has taken a pretty big hit.
Right. Depending on the index, we're talking 6% to even 17% down. Yeah. So basically saying, hey, in this crazy world, that predictable fixed income, even with some default risk, it's looking a lot better than those super volatile stocks with, uncertain growth. I see. So credit's shining even brighter now in comparison.
Yeah.
But what about the stock market itself? Does he see good things ahead for stocks?
That's where he gets a little more cautious. He brought up the price-to-earnings ratio. It's around 19 right now. And historically, when it's been at 16, the market has returned, on average, around 10% a year, over the last century, that is. With the PE higher than its average, he's basically saying, don't expect those same blockbuster returns from stocks anytime soon. What you pay for something matters, and the S&P 500 is, pricey compared to history.
Right. Classic reminder. Entry point is key. Now, what I noticed is he seemed way more certain about credit. Like, why is that? Why is he so confident about debt right now?
So it all comes down to how credit returns work. With bonds, the return is pretty much laid out right there in the contract. The main question mark is that default risk, will they actually pay you back?
And what does he think about that risk, given his decades of experience?
He's got an amazing track record, right? He said in 47 years, focusing on non-investment grade credit, so the riskier stuff, something like 99% of their issuers have paid in full. These companies, they really want to avoid defaulting because it can mean losing their whole business.
Right. Makes sense. So yeah, not completely risk-free, but the odds of getting that promised return, they look pretty good, especially compared to the stock market roller coaster. Now let's get into these tariffs, because Marx actually said that this whole shift away from free trade and globalization, it's the biggest change he's seen in his entire career. That's a big statement.
Absolutely. And he was really firm on the point that the past 80 years of global trade, since World War II, that's been a massive driver of prosperity for everyone, like that rising tide lifts all boats idea.
He even used a really funny analogy to explain it, something about pasta and watches.
Yeah, exactly. He basically said, isn't it great that Italian companies are awesome at making pasta and Swiss companies are pros at watches? If we stopped trading, the Swiss would have to make their own pasta, Italians would have to try making watches, and we'd all be worse off. The quality would probably suck, everything would be more expensive, just not efficient. That's the danger of protectionism. It stops countries from specializing and doing what they do best.
Totally. And then he connected globalization to something that affects all of us, inflation.
This was really fascinating. He pointed out that for 25 years, the cost of durable goods in the U.S., like everyday stuff, it actually went down by 40% after you adjust for inflation. That's huge. It means things got more affordable for people. Globalization helped with that because you could source stuff from the cheapest, most efficient producers.
So now we've got these tariffs, which make imported goods more expensive. Where does he see inflation going from here?
Well, he thinks we might be heading back to a time of persistent inflation. Tariffs are basically an extra cost. So the question is, who eats that cost? Do consumers pay more? Do importers and exporters make less profit? Maybe even the countries exporting the goods. We don't know yet, but someone's got to pay. And that extra cost in the system, it pushes prices up overall.
So lots of uncertainty in the air. Marx even used the word dislocation to describe what's happening right now.
And this is something really important for everyone to understand. He's basically saying that it's almost impossible to judge right now if these drops in asset prices, stocks and stuff, are they enough? Too much? Too little? Nobody knows. Things are changing too fast.
I love that analogy he used. He said it's like a snow globe.
Yeah.
Yeah.
And that someone's shaken up the world economy, geopolitics, everything, and it's all swirling around. We can't see what the final picture is going to look like. He's even super skeptical about those macroeconomic forecasts right now. He's like, there's just no way to predict what's going to happen. The odds of any forecast being right, it's super low.
And remember when they asked him about that famous investing saying, be greedy when others are fearful? He brought up Bloomingdale's. What was that about?
He was being clever. He said, imagine Bloomingdale's is having a sale, right? Prices are lower, it's tempting to buy. But how do you know if the discount is good enough? Maybe they'll drop prices even more later. Same with markets right now. Asset prices have come down, that's good for buyers. But nobody knows if it's the best time to jump in. Maybe things will get even cheaper. It's about recognizing opportunity, but timing is key.
That's a good one. Okay, last thing from Marx. What did he say about the U.S. as a place to invest? Still the best game in town?
He thinks so, but maybe not as much as before. He's worried about the rule of law, how predictable things are, and especially the U.S. government's debt situation. He even said it's like we've got this golden credit card with no limit, and the bill never seems to come. Nobody's worried yet, but what if that changes? What if there's a limit after all? Or the bill actually comes due? That could shake investor confidence in the dollar and U.S. debt. Big risk.
Some really important food for thought from Howard Marks. Okay, let's move on to our second source. This was a YouTube video from a channel called Nanya. The title is Ushe. Ushe, ikoi, which basically translates to tariff trap, a forgotten war economics. The video makes this really provocative comparison. Are we lucky to be living in this peaceful post-World War II era? Or are we on a similar path to the Great Depression and war, driven by tariffs? It's a pretty intense way to look at things.
Yeah, this one gets pretty dark really fast. They start by talking about the Smoot-Hawley Tariff Act in the U.S. back in 1930. And they point out that almost right after it passed, 23 countries started an arms race. Japan was hit hard because they depend so much on trade, right? Exports plummeted, their economy tanked, and they turned towards militarism. Remember the 9/18 incident when they invaded Manchuria? The video basically says that within 4 years, while the West was scrambling to make new trade deals, the Axis powers, Germany, Italy, Japan, they were already dividing up the world. Conquest was more profitable than trade. So the takeaway is, when countries turn inwards economically, it gets way more likely they'll fight each other.
That's a pretty chilling connection. They even quote an economist from the Nuremberg trials.
It's a powerful quote, isn't it? He said, when tariffs become weapons, bullets become ballots. Basically saying that every day we delay free trade, it costs us in wars and economic disasters. And the scary thing is, this pattern keeps repeating throughout history.
And they go even further back, right? They talk about the American Civil War. What do tariffs have to do with that?
The video says that those protective tariffs actually made the North-South tensions way worse. In 1828, they had this tariff of abominations. It raised tariffs up to 40% to help northern industries. The South hated it because they relied on exporting their crops. Then in 1857, tariffs went down a bit. But once Lincoln was elected and the North was in power again, they passed the moral tariff in 1861, raising them even higher, to 47%. And the argument is, this really hurt the South economically. While the North was getting richer, the South was getting squeezed. And that was a big reason why the Civil War broke out, they say.
They also talk about the Panic of 1893 and how it connects to the McKinley tariff.
Yeah, another cautionary tale. That tariff in 1890, it was almost 50%, meant to protect American industries from the British. The steel mills in the North, they were happy. But the video says that the prices for imported raw materials went through the roof, so American products got super expensive too. And then Europe got mad and slapped tariffs on American agricultural exports, so farmers were screwed as well. You couldn't buy cheap imported stuff, and you couldn't sell your own stuff abroad. It was a disaster. Businesses collapsed, banks failed, unemployment soared.
Wow, that's a really clear connection. And then, of course, they talk about the Great Depression and the Smoot-Hawley tariff,
which they present as basically repeating the same mistakes as before. In December 1929, Senator Smoot, he actually said that low tariffs were the problem, and he wanted to raise them way up, even though tons of economists and even business leaders like Henry Ford warned against it. But they did it anyway. June 1930, the Smoot-Hawley Tariff Act passed. Tariffs on thousands of imported goods went sky high. The day it took effect, the story goes that ships in New York Harbor lowered their flags like it was a funeral for free trade. And guess what? The Dow Jones tanked. And global trade just froze up because everyone started retaliating with their own tariffs.
Yeah, the numbers they give are really shocking. It really shows how badly things went.
Absolutely. U.S. exports went from $5.5 billion in 1929 to just $0.7 billion 3 years later. That's an 85% drop. Imagine that happening today. Ford's car exports, they dropped by like 95%. Everyone retaliated. Canada, the UK, France, they put a 400% tariff on U.S. goods. Germany basically said, forget it, we're doing everything ourselves. And global trade as a whole shrank by 70%. So they're saying, yeah, the stock market crash in 29 was bad, but it was the Smoot-Hawley tariff that really kicked off the Great Depression.
And the effects weren't just economic, right?
Exactly. They make this really important point that the economic misery caused by those tariffs, it actually helped extremists come to power. Like in Germany, with hyperinflation and unemployment, people were desperate. And that's when Hitler and the Nazis gained a ton of support right after the tariff. Same thing happened in Italy with Mussolini. And even the U.S. government realized it was making things worse. They saw that as U.S. tariffs went up, Germany and Japan started spending more on their militaries. It was a vicious cycle.
Wow, that's a scary thought. They end the video talking about the Bretton Woods system. How does that fit into the whole tariff story?
Well, they present Bretton Woods as the solution to all this protectionism. It was created in 1944 as World War II was ending. The idea was to prevent another trade war by setting up rules like most favored nation status and ways to resolve disputes peacefully. And it worked. Global tariffs went from an average of 40% in 1947 down to just 9%. And during that time, we had peace and huge economic growth. But the video warns us that these institutions, like the WTO, they're getting weaker, and we're seeing more and more trade barriers going up around the world. So the message is, don't take peace and free trade for granted. They're fragile, and they come at a high cost.
Okay, that's a lot to take in. Definitely some sobering historical lessons there. Now, for our last source today, we've got another YouTube video, this time from a channel called Shuri. The title's a mouthful, sir. Shuri Sanofficial Notia, sir, a sudzad sud sku sensium. Shola, solida du hipi, sodia dronsushea, itarudo susi shoy. Shude sanabu, yul o sharle iya. Si shuria joan, satu shoyo sat within sazia no teen hapu yorudi, sutere selia. Bin otestas futiagi. So chiap sandir shotes du, which explains a fot mission son lo yi, which perfectly dice. Sablofiz win suchiretasico akang uzar. And si peka povire di down warish. For Shoche and Shoria, make it far out.
Right. This one breaks down Trump's strategy into two main parts. Tariffs, obviously, and then his overall foreign policy towards East Asia. They start by talking about those initial 10% tariffs he put on Chinese goods, and also the tariffs on Canada and Mexico, and how those countries immediately hit back with their own tariffs. China targeted things like U.S. coal, natural gas, oil, farm equipment, big cars, stuff like that. The video argues that these tariffs weren't random. Trump was going after the top 3 countries that export to the U.S., Mexico, China, and Canada, trying to make their goods less competitive. It's that America First idea in action.
They also talk about why he can't just keep raising tariffs forever.
Right.
What are some of the limits on that?
Right. There are a few reasons why he can't just keep going higher and higher. First of all, if tariffs get too high, prices go up in the U.S., and that's bad for everyone. Also, the video points out that tariffs on Chinese goods were already pretty high after that first trade war, like around 20% on average on almost 70% of the stuff they send us. So there's not much room to go higher without causing even more problems. Plus, there's this idea of diminishing returns. The more tariffs you add, the less impact each new one has. And China's not just sitting there taking it, they're finding other places to sell their goods, like Southeast Asia. They're adapting.
Okay, so there are limits on how much he can do with tariffs directly. But what about the bigger picture? What are the political goals behind all this?
Well, the video says that Trump's using tariffs to achieve a few things. First, he wants to show that he's different from past presidents, especially Biden. He's also using tariffs as a bargaining chip, Start high, then offer to lower them if the other side gives him something he wants. Another interesting point they make is that he seems to care more about concrete economic wins, tariffs, trade deals, money, than about things like human rights or democracy. It's all about transactions, getting a good deal for America. And domestically, he's also using tariffs to put pressure on the Federal Reserve, to cut interest rates because the economy's feeling the squeeze. The legal basis for all this is pretty interesting, too. They say he's using this thing called Section 232 and also the International Emergency Economic Powers Act, which are usually for national security emergencies, not trade wars. So some people think he might be overstepping his authority, and it could end up in the Supreme Court.
Now let's get to the part everyone's really interested in. What does all this mean for Asia? The video has some pretty strong opinions about that.
Yeah, they argue that Trump doesn't really see Asia as all that important to the U.S. It's like a peripheral region, not a core interest. So he's more willing to use it as a bargaining chip in deals with other countries. His whole foreign policy, they say, is basically a modern version of the Monroe Doctrine. You know, America first, stay out of other people's business unless it affects us directly. And when it comes to Asia, it's all about transactional diplomacy. Everything's on the table. Every relationship is about getting the best deal for the U.S.
And what about Taiwan and China? They seem to be in a really tough spot with all this going on.
Yeah, for Taiwan, it's tricky. Some people there might prefer Biden because they're afraid Trump will just sell them out to China to get a better trade deal. But the video actually says that Trump sees Taiwan's value in a different way. He knows they make a lot of the world's computer chips, so he thinks he can use that as leverage, like a protection fee. Both Taiwan and China are kind of peripheral in Trump's eyes, so he might be willing to sacrifice either one if it gets him in what he wants from someone else. They even speculate about what would happen if China actually invaded Taiwan. They think it would backfire, that China's economy would crash, and maybe Trump would end up cutting a deal with Russia at China's expense.
Wow, that's a pretty wild scenario.
Yeah, and they point out that the China-Russia relationship isn't as strong as it seems. They call it a superficial major power alliance, meaning it's more about convenience than genuine trust.
Oh.
And Trump has said he wants to improve relations with Russia and end the war in Ukraine, which would really freak China out. They also blame the Democrats for pushing Russia towards China by being so confrontational.
So the takeaway is that things are really unstable in Asia right now.
Exactly. They say that Trump's way of doing things, it's like a sword hanging over everyone's head. No one wants to make a move because they don't know what he'll do next. So it might be stable in the short term, but in the long run, it's really dangerous because no one knows what the rules are anymore.
So just to sum up, we've got Howard Marks saying credit looks good, but watch out for trouble in the U.S. Then Ye giving us this really scary history lesson about tariffs leading to war, and then saying Trump's turning Asia into a giant game of poker where anything goes. It's a lot to process.
It is. It paints a picture of a world that's changing really fast, both in terms of the economy and geopolitics. And the big question is what happens next, especially as countries move away from those old rules of global trade and start acting more selfishly, putting their own interests first. That could have huge consequences.
Yeah. And that's our final thought for you today. Given everything we've just discussed, how do you think individuals and countries should prepare for this new world, where global norms and alliances are constantly shifting and everything's driven by who's getting the best deal? What do you think this means for peace and prosperity in the long run? It's a lot to think about, and we hope this deep dive has given you some valuable insights. Thanks for listening.